Hey, Mallory, will you enable screen sharing for me, please?
No problem.
Do you have Renee's computer, too?
I do not, but
So
okay.
you're Renee then on the screen, huh?
Yeah, I was just gonna change my name to Mallory on Renee's account. Okay, it should let you now, and we're recording and live on YouTube.
Okay, looks like we've got a quorum at least. It's 1:01, Friday, September 17th, 2021. I'm going to call to order the Grand County Budget Advisory Board meeting. First action item is approval of the minutes from September 3rd, 2021. I'm going to postpone that. We got a rough draft done last night, but I still need to do some more work on it. So we'll catch up at the next meeting with those minutes. And then, let's see, first off, on the review of non-department budgets for 2022 is the Grand County Public Defender. And Mallory actually is put...
SRL Part 3 and Part 4 and Part 5.
All right, let me pull up the budget software. Okay. Public Defender. So this budget's changed a bit because Mallory has been trying to set up a managing public defender, and we've got some grant money coming in. Maybe, Mallory, you just want to go over this budget since you're most familiar with it.
Sure. So do you want me to start with just the projections that we're going into, or what we're requesting?
More just an explanation of these different line items. Like, we don't need to go into great detail about it, but just give an explanation of some of these line items.
Okay. So the managing public defender would be ideally Aaron Weiss once we get that set up. And that is, as Chris mentioned, grant funded in part. And so last year, I think it was quite a bit more that we looked at just because we were working through a few different scenarios and some contract things, but it should be at 108. And then above that, we have the conflict contract A, and that has been in place at, I think, 16,000 for a few years, and is something that would like to adjust a little bit. And with our required spending through the grant, it's not actually a big bump, and actually maybe somewhere where we might need to shift some funds around. I'm not sure. I need to look at some of the market salary stuff to figure out what that would be, but it wouldn't be much more. The Parental Defender is, as it sounds, our Parental Defender, and we're going to keep that the same as it is. It's really somewhat of a part-time position, but obviously it varies quite a bit given the unknown of how many cases will be going to the Parental Defender. The Defense Resources is actually kind of a bit of an all-encompassing one because a number of our parental defenders are conflict defenders, but they aren't actually on annual contracts. They are just hourly and then charge us as assigned. But also rolled into the defense resources is true defense resources, such as funding for expert witnesses, psych evaluations, whatever might be necessary. It's just a nice little a pot of money so that they can ensure that it's a quality representation and clients are getting everything they need. And the bottom one you'll see is the position that we hopefully will be bringing in. And that would be the part-time public defender who would take on half of Aaron Weiss's current caseload so that he can focus on the more managing duties. But we don't have that in place yet. An RFP should be going out soon. And I'm trying to think what else might be different. We did change it. You won't see it on here, but the budget codes and really the line items were shifted around. And the reason being that we wanted to match exactly with the budget through IDC so that it streamlines the reporting for the grant. Are there any questions or things that I should dive deeper into?
I just had a quick question about the other miscellaneous line. I saw it had a large budget in 2021, which wasn't spent. I was just curious what the intention was there.
So that is actually created by that shifting of the line items. Before that captured quite a few things. And to be honest, the coding has been all over the place with the attorneys and where they're falling and which they were billed to. So that's why you're seeing that pot of money, because that actually in theory would be more tied to the defense resources in what we're looking at for 2022.
So what happened here is we changed all these account names around mid-year, basically. So this other miscellaneous is the what used to be the main conflict attorney expense line. And so as you can see, this is the amended budget and this is the beginning year budget. So you can kind of just ignore this 2021 annual budget. This new one is the one we amended. And when we amended the budget and changed all the names of the accounts, now that this new green one is what applies now. And so basically this 94,000 is the majority of what this 105 was.
Okay, yeah, that was my question. Thanks.
But yeah, we just shifted all the accounts around and renamed them and then moved some of the expenses around among the accounts also. So this is a new structure. Okay, any other questions on public defender?
The one thing I would add, if anybody is wondering of why the 2021 annual projection and those numbers are a little higher, is because what we've budgeted for is more tied to the grant and kind of what we know we have to do, but it's also rolled into there. And I worded that very poorly, but if there are other questions, I'm happy to send you all the grant information and the budget stuff.
Yeah, we went over this last time. It was one of the line items we reviewed a couple weeks ago. But we're expecting about 83,000 in grant funding. And that, it's a little bit of a projection because the grant runs on the state's fiscal year, not a calendar year. And so we're kind of hypothesizing that we'll get the grant renewed in the middle of next year in July. So just kind of projecting that out. But there is a revenue stream now associated with this program. Okay. Then next up is the actual department we have in the general fund called non-department. And so let's see, first off up here, unemployment benefits, I don't know, is Renee on this or is she not here? Anyway.
I'm here, Chris.
Okay, so It seems to me like this number that I put in here was sort of relative to deciding that we were going to do our unemployment benefits all in one line for each fund instead of breaking it out by department. But it doesn't really look like that's happening. How are we doing? Do you know how we're doing the unemployment benefits? Might be more a question for Jenna Smith.
We started at the beginning of the year breaking it out by department, but we haven't had an unemployment charge for since probably March. I can double check and make sure that they get coded correctly though.
Yeah, well, just let me know. I mean, I don't really care if you do it by department or by fund. I think it would be easier to do it by fund.
I think so too.
But anyway, another little weird thing about the way this software works, when it sees an account number that says 130, which is benefits, it automatically creates this table. And the only way that this table works is if you have employees, but there's no specific employees for this account. And so what I do as a workaround is put the unemployment benefits down here just to get it in the budget, even though it's really supposed to be up here. But I can't enter it in up there because there's no employees associated with this department. So just realize that this number is really the unemployment benefits, and then the actual things that get coded to this are some random subscription stuff, less than $100. So, but the majority of this line is going to be moved up into that line when I upload the budget to Cassell, but this is the only way I can do it right now. So a little weird thing. There's a couple other places where I have to do this also. You'll see in the USU extension, I kind of have to do this as well because we pay salaries for USU, but they're not our employees. So most of this entire department is when we have expenses that are they're county expenses, general fund expenses, but they're not necessarily tied to any singular department. And so, we have sometimes there's some public notices that we need to put out that are general in nature, not department specific. So that's what that public notices line is. Office supplies, again, just sort of random supplies that sometimes are needed across the county. The bank charges, these are mostly fees from Zions, I believe, get coded here, and it's a component of all departments, so we put it in here instead of in any particular department. There's a Frontier phone bill. I can't remember which one it is, but there's some Frontier bill that gets coded to this also, so that's what that is. Professional and technical. A large part of this budget is our centrally assessed attorney. So these big centrally assessed companies are always appealing their property values, and it's very technical. And so we have an attorney that we work with who represents us in all these tax appeals. And so that's the majority of that budget, but this is all, there's some other random stuff we also assign, like indigent burial when somebody dies, but there's nobody to pay for the funeral expenses. We pay for them sometimes out of here. The county website, Civic Plus, gets paid out of here. Some other random mailers sometimes when we need to do a mailing, but it's not department specific. And then we have our main liability insurance premium payment comes out of here. I haven't seen the actual renewal yet. They're still working on it. So when I get that, I'll be able to change this number out. I usually, put it at a kind of a bigger number, and then when I get the actual, like for instance, in 2021, we paid $136,890, so I'll be able to amend the budget to match that. And then it's probably going to go up. It usually goes up And so when I get the actual renewal rate, I can plug that in. And then some more miscellaneous supplies. This is like flags, a bunch of other miscellaneous supplies. And then this last one is capital equipment. This is associated with our new enterprise lease program. So we have a couple old cars parked over by the maintenance building on the north side, and that are just used generally. And so we're planning on selling those and replacing them with a couple leased vehicles. So this is the lease payment for 2 sedan type cars for general purpose use across the county. Anybody have any questions on this non-department department?
Chris, this is Chris Kaufman. Can you hear me?
Yeah.
I just had a thought. Have you ever heard of any counties splitting the cost for the attorney on the centrally assessed appeals amongst the taxing entities? Because yes, it's a benefit to the county, but it's, primarily a benefit to the school district since they're the biggest taxing entity.
That sounds like a good idea. You want to contact them all? I mean, you're right. It's not just us that benefits from it. And I think might be worth reaching out. The problem is I never know exactly how much it's going to be, and maybe there's some way to split it up percentage-wise based on total taxes collected or something like that. I don't know. But yeah, I mean, I think you're right that it is an expense that's not just for Grand County. But as you know, Chris, it's really us working on behalf of our local taxpayers, because even if these centrally assessed values drop, it doesn't really hurt our bottom line. But what it does do is put a disproportionate share of the property tax burden on our local constituents versus, these big multinational corporations and whatnot that are not local necessarily.
But when it happens through the appeal process, then it's actually a hit directly to the taxing entities unless they do a judgment appeal tax rate.
Well, sometimes it is. Yeah.
The only case where it shifts the burden to the taxpayers is when it happens, and the case is resolved in time for it to, affect the collection rate, which is very rarely because it usually takes years. So unless the taxing entities do a judgment, then it's just coming out of the delinquent taxes they would otherwise collect. But I was just thinking another way to skin that cat sort of would be to include it in the assessing and collecting amount. So I know that recently the state auditor or somebody was asking us to total up what our total expenses are for assessing and collecting, and I don't know if we included the cost of the attorney there, but that might be something to consider when they're determining whether or not they want to increase how much we can charge for assessing and collecting.
Yeah, I didn't think of that. So you mean like move it over to the assessor's department budget?
Well, I don't know if we'd have to do that in Cassell. And I'm not as 100% sure about how that whole process works, where they reevaluate, are we bringing in enough money from our assessing and collecting tax rate to actually cover our expenses? But I know that Quinn had to send them, sort of an estimate of what that cost was. And I don't know if we included the attorney's fees there or not.
Okay. All right. Yeah, I don't know if it's even eligible or not, but if it is, be a good thing to think about in the future.
I'll check with some other counties and see if any other counties are trying to spread that out to the taxing entities or including that in their assessing and collecting. I'll see what they say.
Okay.
So speaking of other counties, I don't know what the details of these centrally assessed appeals are, but would it make sense for Grand County to pool resources with other counties? And
that's how it works already. So,
okay, so this isn't this is our share of some attorney who's working for several counties.
Yeah, and so this guy, he splits up his billing based on how much of the value that's being protested or appealed is in each county, and that's how he does his billing. And so that's how it works already. At least that's what he tells us. I guess maybe double check that, but.
And sometimes there are counties that freeload, if they don't have that much value in it, they may not, participate in the appeal because they don't care that much.
Yeah, I guess if they just refuse to pay, then I don't know what we can do about that. But they're probably not it's probably not a big deal. But this attorney can be pretty pricey. We actually shifted this out of, I think, the clerk's budget and put it into this budget in 2020. And so that's where you see sort of a big shift between 2019 and 2020. I mean, it doesn't really matter necessarily where we account for it, as long as we remember about it when we have to do our reporting, as Chris mentioned. I mean, it has to be in the general fund, but other than that. Okay. Any other questions on this one before we move on?
Chris, it's Renee. Just before you go too far, I checked on the unemployment. So all of the general fund ones have been coming out of this account for this year. We've only had three charges, 3 months in the whole year so far.
All right. So I guess the question, like this budgeted amount, 12,000, is relative to sort of a peak over the last several years, not an average. I don't know, it's not a huge amount of money, but sometimes I like to just make sure, that the highest amount that we've seen is covered.
Sure. And in 2021, in the beginning, I think it ended at September 1st, but the Workforce Services was giving the 50% discount with their CARES Act funding. So that's over now. So these claims this year, at the beginning part of the year, were lower than they normally
Yeah,
are.
that was lucky. I mean, because we were expecting huge expense initially of all the furloughs. But yeah, we got subsidized on that, so that was good. But anyway, it's very variable. You never really know. I guess depends on how many people quit or get fired. But it's not an easy number to predict, and so I usually put in enough to cover what I expect could be the maximum amount.
Hey, this is Quinn. Let me jump in for a minute. I just found the report I sent to the state. I did not include that. I split it up by department, so I did not include the non-department expenditures, but I could reach out and see if that's eligible.
Okay, yeah, that'd be good. Okay, anything else? All right, we'll go on to the audit. So this is for our main auditing service. It may actually be a good idea. I think the internal audit, we have two different audit situations going on. We got the main audit, which is our main annual audit where we have an agreement. This particular one needs to go out to bid soon, I think. It's been, I think, more than 5 years since we've gone out to bid on our auditor.
I've got some sample RFPs too from other counties that we can review and then tailor to fit us.
So we should do that. And then we also, the state auditor's office also launched another sort of internal controls audit requirement, and that's where we pay Cody Dieter. And maybe we should move that expense. I think it's over in the commission or the administrator. It's line items, but I might, when I get to that, wherever that is, I might move that. It's about $10,000 a year that we pay for the internal controls auditor. And so I might move that expense line into this as it makes sense to do so. But it was about $10,000. And so, it's hard to say when you go out to bid what you're going to come back with. So, this 40,000 is a little bit more than 2020 was. And so, may be the case that we go out to bid and end up, even with a little bit higher price. I don't know. Depends on what kind of response we get. But, to be on the safe side, put in 40,000. Any questions on the audit expense? All right, moving on to election.
Sorry, Chris. I did have one thing to mention on the audit. Just the idea that there's no law that says we have to, but there's certainly some schools of thought that would say that you really ought to switch your audit company regardless of the bid results, every once in a while, so you don't get too cozy with one company. And I don't know how many years we've been with the one we're with, but it's been an extremely long time.
Yeah. Well, I don't think they want us anymore anyway, so. Right, Quinn? I don't know.
Well, yeah, Chris, and that's another question. Do we want to put any sort of year-end accounting assistance to close the books in the audit expenses, or do we want to keep that in the clerk auditor's office expenses?
We'll keep that in the clerk auditor's office.
Okay, sounds good.
So, yeah, I mean, Smew, Rich, and Marsing is our auditors, and we, if we give the award to somebody else, then we can use Smew, Rich, and Marsing as consultants on preparing our annual financial statements because they are familiar with our books. And then, another separate company would audit the financial statements. But anyway, are we ready to move on to elections? I don't know, you might have some feedback on this department, Quinn. So this is kind of preliminary. I took, obviously every other year the expense varies quite a bit. Unfortunately, we have to pay, we have a lease and service agreement on all of our elections equipment, even when we're in an off election year. And so it's about $35,000 a year, even if we don't have an election. And that's just because we have to pay those agreements and service fees and leases. Most counties do the elections for their municipalities, and the city's doing ranked choice, which our elections vendor doesn't have the capacity to do right now, and so they're doing their own election. And so we don't really have a municipal election that we run. But anyway, next year is a general election year where we'll be running county elections. And so looking back at the last time we ran one, it was about 61,000. And I bumped it up about 5,000 because it seems like the expenses do go up every single time we run an election. I don't know if you have any feedback on that total number, Quinn.
No, I don't see it going up dramatically. I haven't heard anything they're increasing any of our rates on any of our leases or anything else. I mean, probably predict a slight increase, but nothing. I haven't heard anything that would make me think it's going to be a lot more expensive than last year was.
I believe that our agreement with Runback allows, for some marginal price increases every year associated with, increases to cost of doing business. So I think, we contract with Runback Elections to do our ballot printing and mailing. And those costs are likely to go up a little bit according to the agreement that we signed with them. So I think in general, this is probably a pretty safe number for elections for next year. Do you think, Quinn?
Yeah, I'm good with it for now.
All right.
So could we look into what it would take to do city elections in 2023? Like whether our vendors are gaining the ability to do ranked choice voting, or whether there are other vendors that could do that?
Yeah, I know for this year, it would have cost us about 20, if I remember right, $20,000 to switch over the machines to get ones that were capable of tabulating the ranked choice results that the city was interested in.
Mhm.
And that was just obviously way more than we could afford to spend on that. I can keep in touch with the vendor for the machines and see. I do know they're kind of working towards it, but they're also not completely on board with it. So it'll be interesting to see how that plays out. There's another type of voting. I'm trying to think of the term right off the top of my head, and I can't remember it. Just flew right out of my head.
Approval with voting.
Approval voting. Yes, thank you, Kevin. That our machines would do, and there's been a lot of discussion about that at the state among the auditors to kind of move that direction versus ranked choice. The results are very similar. The process is similar. It's not identical at all, but it's similar. And so I don't know. We'll have to see where that shakes out. But yeah, we can definitely look into what that would
And I
cost
guess we
us.
would want to compare that $20,000 figure you just mentioned to what the city's paying Utah County to do the election.
Yeah, the city got a screaming deal with Utah County. I look back through our stuff. I don't even know that we could mail the ballots for much less than what Utah County is charging them. So
Okay, well, that's good to know. Thanks.
Yeah, I mean, with those big counties that have, a million people or and many municipalities, the economy of scale works in their favor, and so they get a lot better deal on everything. So, to me, it seems unlikely that we'd be able to compete unless the vendor makes ranked choice cheap for us. I mean, part of the problem with that, I think, is just that the Clerk Auditors Association is, last time I checked, it seemed like Utah County Clerk was the only one that was pro ranked choice, and the rest of them were vehemently against it. So maybe that will change over time. I don't know, but that affects what the vendors are willing to do. If all their customers don't want to do it, then it affects what they implement too.
Yeah, I think I pulled the numbers before I gave the city a quote on how much it would cost us to run the election. And this is just off the top of my head, so don't quote me on this, but I believe we spent between $5,000 and $6,000 just to mail the ballots out in 22. And obviously, there'd be fewer ballots with just the city versus the entire county. And then Utah County offered to do the election for them for between $7,000 and $8,000, and that there was no way. Like if you included our staff time and our effort, and there's no way we could have done it for that much.
Yeah, we'd never be able to match Utah County price-wise as long as they're willing to keep doing it. Again, just because of economy of scale,
Yeah, so I guess we'll see whether things go smoothly this year, having it with the election being run far away. But if it doesn't go smoothly, then the city might be interested in paying more money for a homegrown solution.
Yeah, we'll see. Okay. And then moving on to fire control. This is where this budget is via our agreement with the state for the state fire warden and the interlocal agreement for wildland fires on fires that start on private property but move into adjacent wildlands. And they actually are going to do a salary adjustment for some of their employees. Our fire warden's one of them, and they haven't gotten that fully prepared yet. Rudy Sandoval said that he's going to have it to me by next Monday. But they did give me some preliminary figures, and so I just took, the rough figures they gave me, and I bumped the salary up a little bit for the warden. And this also includes salary for an part-time assistant warden. And so this salary is actually this budget's by agreement. And you can see in the past that they very rarely actually spend their whole budget. But since this is by agreement, we're agreeing to budget the amounts that are in the agreement. I put the full amount in, even though they've never really come close to spending the full amount. I mean, part of that has to do with the fact that they've had a hard time filling the position, but they do have people in the positions now, and so maybe they will get closer to the full budget. But again, this is by agreement with the state, and so, whatever we come to via that agreement is what I plug in. And I think that when Rudy sends me the 2022 request, that it's going to be pretty close to this, based on what I've seen and talked with he and Jason Johnson. Any questions on the fire control budget? All right. Animal control's up next. We have an agreement with the city of Moab for animal control. So their animal control officer will respond out in the county, and then they bill us per incident. So those come in, and Quinn pays them and codes them to this contributions to other account, which is the agreement with the city. And then we also make a contribution usually to Humane Society, and they put their request in again this year for $12,000 again. So I guess I would just, does anybody have any objections? I think this is mostly to cover their free or reduced cost spay and neuter program. Does anybody have any objections to approving the Humane Society request for $12,000? All right. Well, that covers that then on animal control. And then public health. Right now, these are just my guesstimates because neither of these entities have submitted formal requests yet. One thing to note with Southeastern Utah District Health Department is that it's the combined cost of our contribution to the health department and the Moab Area Watershed Partnership, which operates under the health department. And at this point in time, it does anyway. And so they put in a request for $2,500 to fund the Moab Area Watershed Partnership, and then the other amount is, my rough guesstimate of what they're probably come back with for a contribution, and they negotiate it, and there's a formula, et cetera. And so when they get that request in, I'll plug it in, the actual request in. And it's the same with Four Corners. Four Corners has some preliminary information. They actually dropped our contribution a little bit in 2021. Again, I think they have a formula that they use to do this all. And so I kind of expect it'll go up a little bit. I don't know how much, but I think it's be pretty close. Counties are statutorily required to provide mental health and substance abuse programming in their county. It's a kind of unfunded mandate, though. But it's just the way it is. And then our health department is I believe a 3-county health department. San Juan used to be a part of that, but they dropped out. And so it's Carbon, Emery, and Grand are a part of that agreement, and they calculate our portion, I think mostly based on population, but maybe some other factors also. Anybody have any questions on these two line items? All right. And then we do have a department for our contribution to the USU Extension Service. And they provide a real broad category of services: agricultural consulting, 4-H program. They help out with teaching people how to do financing, how to do tax preparation, all kinds of different things. They've also got, I think maybe Christina Young's got hired on over there and doing some work with them. She's a scientist. One thing that's likely to happen, and I haven't got a request in, I just wanted to kind of cover this while we're waiting. This is another one where the salary I put in down here on capital improvements, but it's really going to get moved up into the salary line item. So this is going to go up to here when I import the budget. But USU Extension specifically got about $1 million appropriation from the state legislature to build them new space in the USU campus, the new USU campus. And, you know, part of what goes with that is that we are going to have to cover an M&O expense related to that new campus. And so, you know, we typically pay out about $9,000–10,000 a year for rent in the space they're at now, which is the old campus facility. But I expect that this is going to go up quite a bit when they move into their new building. And so I think that a lot of that still needs to be worked out. And I expect that this budget's probably going to, it could possibly hit $100,000 or more in relation to paying for the costs associated with their new space up at the campus. And that was something that the commission agreed to back when the appropriation was being considered, the $1 million appropriation. So we knew this was coming. We don't know exactly, I don't know exactly how much it's going to be, but it's going to be more expensive. But also, I think it's going to provide a greater level of service as well to the community. Anybody have any questions on this USU extension budget? Obviously, it's not filled in, but when we get the request, we can revisit it. All right, then in Department 4820, transfers and other uses. Starting off here, this is where we transfer money from the general fund into our municipal building authority fund to pay the debt on the jail remodel bond. So that's about $150,000 a year. And that's a pretty fresh bond, so I think we've got quite a ways to go to pay that one off. And then this contribution to other funds, this one's in association with the COVID grant we got for the airport. And so normally the airport's debt is paid by the TRCC tax, but since the COVID grant that we're going to get will cover debt as well as maintenance operations, and one of them will cover capital projects also. While we have that money, we're going to use it to pay the debt. There's three loans that we have on the airport. One's for the runway expansion, one's for the terminal expansion, and then one's, I think, for the apron and taxiway improvements. So we have three different debt that kind of adds up to about $85,000. So instead of transferring from TRCC, we're bringing the COVID grant into the general fund and then transferring that amount over to the debt service for the airport. This line right here, contribution to general fund surplus. This is a line that I use to basically balance the budget. So if we have an excess of revenue that we haven't budgeted for, then this is where we budget to send that money into the fund surplus. We may need to actually take a close look at how we're going to end up in 2021, because we're very close to actually being at the limit for how much we can have in the fund surplus. I believe you can only have 50% of your annual unrestricted revenue in your fund surplus. And so when we look at general fund revenue, their unrestricted general fund revenue, we can't count TRT we can't count TRCC. So even though we move TRT and TRCC into the general fund to offset expenses in the general fund, those transfers aren't included in that calculation. We can only use unrestricted revenue for that calculation. And so we're about $6.5 million right now in our general fund reserve, which is probably very close to being at the maximum statutory amount. Which means that if we project that we might go over that amount, what we need to do is transfer money into our capital projects fund instead. Capital projects funds don't have a limit. As long as the money that you transfer over is earmarked for a capital project, you can save up for it and you don't have a limit. But the general fund reserve does have a limit, and we're very close to it. So I'm going to have to do some work to calculate that. And I think that any revenue over expense in 2022 is probably going to have to go into capital projects also, or stormwater, or whatever.
Chris, I think that went up to 60% this year for 4th, 5th, and 6th class counties. I'll have to find that legislation. I know there was something that passed that made that go up a little bit.
Well, that'll be helpful, because I know that we're getting real close to hitting the maximum amount we're allowed to have in our fund balance.
So Quinn or Chris, what code section does one look if one wanted to look that up? Do you know how to?
I'll have to find it and think about it. I know I paid attention to it when it happened during the legislative session, but I'd have to look it up and find it.
Okay, well, if you find like a citation, please send it to me. I'm curious to read it.
You bet. No worries.
Yeah. Yeah, I can't remember where it is off the top of my head, but we can find it. And then the next line item is a contribution to the B Road Fund, Roads Department. And when we passed our optional transportation tax, one of the requirements of that tax is that we couldn't reduce our general fund contribution to roads after we passed that tax. And we were contributing $200,000 to B roads from the general fund at that point in time. And it's still fine to actually make this transfer, because both the optional transportation tax and B roads can't be used for like fleet management. So the roads department, in addition to doing road projects, they also take care of the county's fleet. They maintain all the vehicles and do a lot of other services, generally speaking, for various county departments. And so this amount, it covers those expenses also, just fleet management, maintenance on the county's vehicles, other things. But anyway, we're locked into it as long as we collect the optional transportation tax.
So Chris, I'm a little confused. So we're required to send $200,000 to the road department, or are we required to send it more specifically to B roads, some subset of that?
Well, we call it B road, but
okay, so the thing we call B road covers all the other things you mentioned.
Yeah, and so in B road is Fund 21. It's got a lot of different names, but that's where most of our transportation-related expenses are. But it's also where all the employees that do the work on the fleet maintenance, Cody's the fleet manager, and a lot of the mechanics out there also, do work on the county's vehicles. And so that's not, B road money can't be used for that. Neither can the optional transportation tax. And so, this is enough to cover that without having to worry about it. Otherwise, they would have to generate invoices every time they, change the oil and charge the department specifically for it. But, the way we're doing it now, it just covers those expenses. We used to have part of some of the road department employees' salary and benefits in the general fund, and we quit doing that because it's just really easier to just do a transfer rather than do a huge amount of accounting and split paychecks between different line items and whatnot. So yeah, this covers that. I mean, that was the intention before we passed the optional transportation tax. But then when you pass the optional transportation tax, part of the statute required that whatever contribution you're making had to from the general fund had to be maintained.
Yeah, so I guess my question is on that statute, was it referring to the contribution to the road department in general, or to something called B roads, or things that are actually spent on B roads, or was it just not specific enough that it gives us some wiggle room for interpretation?
I can't remember. I'd have to look at the statute again to see exactly what the language was.
Hey, Kevin, it's 1736.16. And Chris, it's 65%.
So he's referring to the fund balance reserve.
Yeah,
Yeah, thanks, Gwen. Could you say that once more?
1736.16.
So it went to 65, you say?
Yeah, for counties with a population of less than 100,000, which I think we clearly fall into.
Oh, good. Well, maybe we don't have to worry about it then. I mean, most of that money is going to go to capital projects anyway, so, you know, might as well transfer a hefty amount over into it regardless. You know, and I was expecting, you know, that $6.5 million, if we can get going on new office space, then, you know, that will be a component of the financing for that. And, you know, when we need money for capital projects, other capital projects, you know, it's on reserve for that as well. And so, like, for instance, we were having a lot of trouble with HVAC, and we're going to have some really hefty expenses associated with changing out old HVAC units. And so, you know, having this a real healthy reserve like this, you know, when you have a real big expense, like when an HVAC unit goes out, you know, we're talking $60,000 to $100,000. And sometimes, you know, it's an emergency situation and you need the money on hand. And so it's, you know, that's the value of having a healthy fund balance, is that you don't have to, you know, worry a lot about these emergency type situations and unexpected expenses. So I think that, you know, it's useful to transfer some of that money over to capital projects anyway, and then just sort of line out a contingency line item for emergency purchases. Something I've been thinking about. We haven't really done that in the past, but I think it's probably be a good thing to do because we have the resources to do it, and it's oftentimes, you know, something that's necessary rather than trying to scramble to figure things out when something happens. So then, again, this contribution to capital projects, normally, you know, the transfer that we make is relative to what we approve, what the commission approves. So as I work with each department, you know, I ask them to give me a list of all of the purchases that they expect to make, you know, for sort of tangible purchases, singular tangible purchases that are $5,000 or more, which would be considered a capital purchase, and then have to go on our asset tracking list, and we have to track depreciation, et cetera. And then the commission, you know, will go through that list and pick their priorities. A lot of the times the resources that we have available for capital projects, you know, we don't know what those are until the end of the budgeting process, because we will budget all the essential maintenance, operations, everything, you know, the basics of government function, and then take a look at what's left over, what resources do we have left over. And then that kind of dictates how much money we have available to contribute to capital projects without drawing the fund balance down. And that's how we usually set that budget. And, you know, I won't have a complete capital project request list, until near the end anyway, until we get through working with all department heads and elected officials. And so this is a line item that we tackle near the end of this process. And it may, include just a big transfer from our general fund reserve to capital projects also. Could cover, again, basically a down payment on new office space that would complement any financing that we may get, and any other needs we want to tackle. So again, something that we kind of do at the end of the process. The next one's Family Support Center. The Family Support Center, one of their main grants got cut in half, and so we had to start subsidizing them a few years ago to keep them going. We were expecting to have to subsidize them also in 2020, but they got fairly significant CARES Act money, and we ended up not having to transfer any money over. But again, this number won't be really calculated until we get done working with Family Support Center on finish their budget, and then whatever their bottom line is, if it looks like they're going to run in the red, then we're going to have to, in the past anyway, we've approved a transfer, basically subsidized their operation. But they have two main grants, one from Department of Human Services, and the other TANF grant, which is, what's TANF stand for, Quinn?
I can't remember off the top of my head. Temporary Assistance for Needy Families.
Yeah, and so, that grant was never intended to be an ongoing grant. It's got temporary in its name, but a lot of the services that it's provided money to have become dependent on it, and our Family Support Center is no exception to that. So it's a fairly tenuous funding stream, and it's always pretty difficult to figure out how to keep the Family Support Center running and whatnot. So in the past, we've had to subsidize them. We may have to again. Then contributions to stormwater. This is, I guess, somewhat of an arbitrary amount, but it's an amount that I think is an amount that makes sense relative to our needs. It's a lot of money, but the idea, with this transfer is to transfer, a fairly significant amount of money every year into the Stormwater Fund, so that we have match money for these big multi-million-dollar projects when the opportunity arises. And maybe I'll just momentarily skip ahead to Fund 18, which is a Stormwater Fund, while I'm here, and then we'll come back to the final general fund non-department. But in Stormwater, this is Fund 18, which is where the money's going. There's two revenue line items in here at this moment. There's the revenue. This line item is the revenue that's the new revenue that's coming in from the general fund. And I also need to talk with the Transportation Special Service District about how their contributions to stormwater will work. Generally speaking, we don't like to bring mineral lease money into our budget because it could be considered as being federal mineral lease money that was retained by Grand County, and that would offset our federal PILT payment. So generally speaking, when we have a project where we're partnering with the Transportation Special Service District, they don't send that money to us. They send that money to whoever we're working with. Like, for instance, if we go and try to get a grant/loan at the CIB, the Transportation District will make a contribution to the escrow account for the project, and it won't go to us. It'll go straight into the escrow account. Although now we're putting money into the transportation district that's not just mineral lease. Mineral lease is the main part of it, but there's other funding that we're putting in there that may not have the same restrictions. So it's possible that they might, move money back into Grand County, although not terribly much anyway. But then the second main revenue line is the money that we pull out of the fund balance for use in the year. And so for 2022, for instance, we're going to pull project we'll have about $800,000 in the fund balance. And then when you add the new $400,000, now we're up to $1.2 million total budget for 2022 for a stormwater project. And we're probably going to, end up having to make some significant match to deal with Pack Creek fire and whatever needs to be done about that. So, if we do make this contribution to stormwater, we'll have about $1.2 million, less whatever we spend this year. I haven't really fully calculated what we spent this year, but it'll be $1.2 million minus whatever we spend this year. Available for a significant stormwater project in 2022. Does that make sense, how that works? So we made a contribution to stormwater in 2019, and that's still sitting in that fund. We budgeted for it in 2020. It doesn't show up here, but we budgeted for it and then canceled it because of COVID. Then we rebudgeted another $400,000 in 2021, which we'll be able to make. Then when we, if we do another $400,000, that adds up to the $1.2 million that's going to end up in stormwater in 2022. All good? Okay, and then just to cover Fund 11, this is health insurance. This fund, it's a little different the way this fund works from most other funds. So within, and I'll just bring something up, for all of our salary and benefits for our employees, we've built a table on the back side of this software, and you click this, and then obviously it's right now, it's got some old names in it of commissioners, but this big table includes all the itemized health insurance and other benefits costs, pension, URS, FICA, all these kinds of things are calculated in detail, and I'll populate a table that has all of the different expenses related to each employee's benefits, and that all gets factored in, gets tallied up, and so all this data basically rolls into one singular number, which is the employee benefits costs. And so when Renee runs payroll, what happens is the benefits part of that money gets transferred out of this line, this expense line, and into the revenue line over in the health insurance account, depending on what the benefit is. And that's where the revenue comes from. So every single department that has employees has an expense line for benefits, and then that money through the mechanism of our accounting software transfers the money over into these revenue lines in this health insurance fund. And then on the expense side of this fund is where we pay the actual insurance provider out of. So these expense lines are where the actual payment to the insurance provider comes out of. And so there's a bit of plumbing associated with how this works, but the short story is that we won't really know how to budget for Fund 11 until we get through budgeting all the salary and benefits for everyone in the county. And then, that will tell us, well, there's a couple things. One, we're working with our health benefits provider or our broker for health benefits to go out to bid for benefits this year. The best we could do negotiation-wise with Cigna, I believe Renee was about, 12% or something like that increase. And if you don't go out to bid every once in a while, then you start to lose touch with being competitive on the marketplace. And so we'll see how that comes back. For whatever reason, the cost of health insurance goes up, 3 to 4 times more than the cost of any other type of commodity every year. So, oftentimes you'll see like the price of goods go up 2 to 3%, but for whatever reason, health insurance goes up a lot more than that every year. And I like to see single-digit, increases and try to keep it at that. We've seen, between 7 and 9% the last few years, which is good, and there's no reason to go out to bid. But at this point, we're going out to bid. So that, once we figure out, go through that process and figure out what our health benefits costs are going to be, then we'll plug it into the back end of the software, calculate it all out for all of our employees, and then that will dictate how I set the budget in this health insurance fund. But it's really driven by the budgeting for salary and benefits across all the departments and elected offices. Any questions on how Fund 11 works? The health insurance fund. It's not just health insurance, it's all the other things also that are benefit related that we have carriers for. Okay. We already covered stormwater mitigation, so I'll skip that. I'm going to have to postpone Fund 25 and 27, but I'm just going to, in detail anyway. But I will go over what these funds are used for. Quinn and I are going to we have a spreadsheet where we track the balances in these funds, and I need to update that spreadsheet and then project it out through the end of the year to actually be able to do this budget. But miscellaneous grants, I've actually started to not use this fund very much anymore, but it still has some legacy grants associated with it. So, for instance, you can see these line items in the top are where, in the past, I was budgeting a lot of our economic development grants that we got. And some of these were passed through, like this outdoor rec grant. We brought that money in, this $150,000, and sent it over to BLM for their boat ramp project, et cetera. So, in the past, anytime there's been any kind of grant, Diana would run it through this fund. It's a little clunky, in my opinion. I kind of like to, I think, keep grants more segregated by the departments that are working on them. Anyway, a lot of this economic development grant stuff is probably going to get moved into potentially a new economic development fund, which, right now, economic development's happening out of the Travel Council Fund, which is Fund 23. But there's a lot of legacy accounts and baggage, in that, the accounting baggage in that fund. And we actually have another fund that hasn't been used for a long time called Economic Development already, Fund 16, but we haven't been using it. And I think it'd be a good opportunity to switch over and start using that because it would give us a fresh start and we can organize our accounts according to statutory requirements for reporting economic development activities, et cetera. So I expect that moving into the future, I probably won't use this fund very much, but there are a lot of legacy funds that are in here that still have money. So this W&D grant is a Homeland Security grant that our Emergency Management Director uses for a lot of equipment needs, radio, communication systems, and other things. So this grant right here, I need to calculate how much has been spent and what the balance is. Then the JAG grant is associated with Public Defender. We also have kind of two sides of our weed department. One side is general fund funded, and the other side is grant funded. And so the main activity that happens in Fund 25 is this biological weed control. So all the grants that the weed department gets, and they're predominantly grant funded, come into biological weed here, and then they have a department. I'm in the wrong thing here. They have a department in this fund also that has salary and benefits and some other expenses, and so it's the other side, the grant side of the weeds department, and then there's another side of the weeds department that's in the general fund. And so when we do weeds department, we have to cover both sides of it, which is probably actually not necessary either. I mean, we could just bring this biological weed control grant into the general fund, as long as we, notated that it was to cover the weed department, and probably do away with all this extra accounting. So I'm thinking about that too, just consolidating weed department up into the general fund and bringing the grant straight into the general fund. There's a whole bunch of other, most of these departments are not even used anymore. You can see all these red X's. These are all legacy grants that are long over with when it came in and went back out. But not all of them are totally closed out, and some have been sitting on the books for a long time. Trying to see which ones. So, come down. So we got, some money left over with the Homeland Security grant. There was some money that I think that was donated for North Lions Park restoration that's still there, like, $1,100. So we just hold on to that money because somebody donated it, or we got a grant or whatever that was restricted money. We are actually working on working with National Park Service Planning Assistance. We got awarded a planning assistance grant to start working on doing some design for the North Lions Park, which is the other side of the river, but basically the boat ramp in that area over there. The boat ramp's in really bad shape. So anyway, this money is a little bit of money that can go toward that project. This GIS grant mapping, this is for setting corner data on all the township corners or whatever. I don't know. It's a surveying grant that we got a long, long time ago, and Lucas said he was going to spend this money and do the work, but he hasn't yet. So that's money that we got for surveying corners all across the county, and that's just still sitting there. Then when Dave Vaughn was inventorying all the roads in the county for GIS, there's a little bit of money that's left over that the state gave us to inventory routes for RS 2477. And I've never even seen that grant agreement. I don't know what we could spend that money on, but we still are tracking it, and we have it in the balance. And some balance with weed control, and then this airport security grant. I think we got some kind of grant a long time ago that never got entirely spent, and this is the amount that's left over, so maybe I'll work with Andy to see if we can spend that down. But as you can see, most of this fund are legacy accounts, and maybe over time we'll just, figure out what to do with all this money that's in here. It's not a lot, but there is some restricted money in here that we need to figure out what to do with, and then maybe close this down and account for grants in a different way. Anybody have any questions about any of that? Yeah, like I said, most of the activity is the weed weed department activity. Then Fund 27, we call it designated funds, and basically what that means is that, usually our budget accounts, whatever you spend at the end of the year just disappears, and then you reset the budget anew each year. But sometimes, usually when you have some type of restricted money that comes in, it has to be spent for a specific purpose, not necessarily a grant, but, it could be donations, whatever. We need to keep track of that money and what it was for and how much got spent and how much is left, et cetera. So that's what this fund is for tracking all of those sort of miscellaneous restricted monies. So we've got search and rescue donations, so we track the donations that come in for search and rescue, and then Jim Webster taps into that money on occasion for search and rescue needs. Sometimes we get donations for the old Spanish Trail Arena. It has an account. We've got a couple forfeiture accounts. This is, when there's some criminal activity and the sheriff's department seizes cash, then that goes into account. Then it needs to be spent in particular ways, and so we have to track that money, track its expenses, all that stuff, and so that happens in this account. Let's see, I'm trying to see if there's anything in here. Senior Center, that's Grant Center, donations. And I'm trying to see if there's other things. Donations, believe it or not, to the Sheriff's Department. And then fireworks get paid out of here. So this is actually an account where the 4th of July fireworks display, all the money that comes in from different sources, and at this point I think it's just the Grand County and the City of Moab that's contributing, but the rec district also used to contribute. But we have a $27,000 budget for that, so we bring the $27,000 in and then send it out via this fund. This account has, this is where the Motorized Trails Committee donations come in and are tracked. Bill Holtz, has put on these building code training classes where where people pay to attend these trainings, and then there's obviously an expense associated with it as well. They usually come out very close to being equal, the expense and revenue. I actually just told Bill, we should just quit tracking this because there's no reason to track whether or not his building code classes are. It's not restricted money, and so normally he comes out so close to being imbalanced. I think we're going to quit tracking this, and so we'll just bring the building code training revenue in to the general fund, and then his expenses for putting the classes on will just come out of his department. And however we come out in the wash is going to be fine. I don't think we need to track that money anymore. There's no reason for it. There's a little bit of donation money that came in for Dewey Bridge restoration, about $6,600 sitting there. It costs a lot more than that, though, to rebuild the bridge. But we do have that money. I think that was actually left over from the first time they rebuilt it. Let's see. Criminal forfeiture again, sheriff's projects. So most of these accounts, this is kind of a messy fund also, but most of these accounts have two line items, one for new revenue and then one for bringing fund balance revenue in. So try to see anything notable. No, I think so. Yeah, mostly just donations and various random things that need to be tracked. The balances need to be tracked, and the accounts can't just roll over to zero next year. Anybody have any questions on this fund? A little bit of a junk drawer fund, but it does have the specific purpose of tracking balances. And we actually track the balances in a spreadsheet, not in the accounting software, and that's why I need to work with Quinn to update the spreadsheet and project out to the end of the year before I can plug all these numbers in. All right, and then, again, I haven't had time to do the accounting for the impact fees because I was out sick part of the week. But I'll just go over it. It's pretty basic, and we'll have to try to run some projections on impact fees. So this is where our impact fees come in. We have an impact fee that we collect for law enforcement, and this goes towards basically paying off the renovation of the old library for the sheriff and the attorney. We quit collecting our Parks and Rec impact fee because the only project that we had in our impact fee plan was the Old Spanish Trail Arena ball fields, and we got that project done, and so we had to quit collecting that impact fee. But if we are overdue to get a new impact fee plan done, and we can certainly include more Parks and Rec projects in the new plan and start collecting that fee again. But at this point, we don't have the ability to collect on it because there's no project.
So Chris, the law enforcement fees, are those collected from building projects or from like special events?
Building projects. So these are all associated with whenever somebody pulls a building permit, they pay these impact fees, and they're calculated, based on how big the project is. I can't remember all the circumstances. Our impact fee plan kind of spells out how it's all calculated, but more or less, the bigger the project, the more you pay. And a lot of it, can come down to ERUs and blah blah blah. But these are all specific to new building projects.
Okay, thanks.
And then we have drainage. So this is the impact fee that can go towards stormwater mitigation. Long time ago, and I talked with Kevin about this, and maybe we can look into if there's an alternative. But a long time ago, the county had no money for stormwater mitigation, and it's still very hard to come by because most of our funding is restricted and doesn't really allow us to spend it on stormwater. But the roads department spent B-road money on a lot of stormwater projects, and the auditors said, "Oh no, you can't do that." And so they set up a big liability. I think it started off in the $900,000 range that the B-Roads Fund was owed for B-Road money that was spent on stormwater. And so there is a liability account. Generally speaking, these drainage fees are, supposed to be going into paying down that liability. But then next we have the roads impact fee, and this is for any transportation. We could spend this money on any transportation project that's in our capital facilities and transportation plan. We're updating our transportation plan now, and that will inform a new impact fee plan also. But all this money can be transferred towards road projects. The Moab Valley Fire Protection District used to have an impact fee that we would collect and just give over to them. Then these other line items are just the interest, because these all are in a savings account, so they have their interest. Do we still have a PTIF for impact fees, Chris? Is Chris still on?
Yeah, it's not, it's consolidated. It's not
Okay.
separate. Yeah.
Well, there's
And
still
Chris,
interest. Oh, go ahead.
what happened to the fire protection fees? Why that wasn't collected in 2020?
They quit collecting it.
So that's a decision the fire district makes?
Yeah. So we were just, being there, we were just doing them a favor, collecting it. I don't want to go into details because it's their thing, but they asked us to stop collecting it and then pay out what was in there.
Okay.
In the balance. So we stopped collecting it and paid them out. Okay, so then the other part of it is just bringing in the fund balances, you know, or money that we pull in from fund balance. All this money that's, except for this amount, this 50,000 was the amount, you know, just to cover. So we had some remaining balance in the Parks and Rec fund that we needed to spend because you have to spend impact fees within 6 years of collecting them. So we took the fund balance of Parks and Rec and sent it to the rec district, and they're going to use it to build a playground or something at Old Spanish Trail Arena. And then these other three are a split that is what I calculate to be about the cost of doing an updated impact fee plan. And this is the way we paid for it in the past, is that we just use our impact fees to pay for a new impact fee plan and capital facilities analysis. So what is that? About 80,000, I guess, budgeted to update the impact fees plan and capital facilities analysis. We're so overburdened with other planning projects that this has been kind of put on the back burner again. But it really needs to get done because you can only spend impact fees on things that are in your impact fees plan. And Quinn has to put together a report every year, an impact fee report, and send it to the state. Or give it to the auditors, and they have to review it. So we're getting close to really needing to do that soon. I don't know how we would be able to fit in another big planning project right now, but as soon as we have the time to launch that, we really should get it going. But right now, you know, there's more balance in there, and Quinn tracks the impact fee balance on a spreadsheet for each of these funds. But that's this side of it. So you've got the new revenue side that comes in alongside, you know, when we collect it during when the building permit comes in, and then we've got the fund balance side of the revenue. Then, you know, we've got the, well, I'm on the wrong thing here. And then we've got the expense side and similar process. And so I usually will, you know, budget to spend the full balance, although this doesn't look like a full balance here. But a lot of times I'll calculate or project what I think the fund balance is going to be for impact fees at the end of the year. And well, this is probably actually, you know, budgeting the new revenue plus the 26,666. But this just needs to balance out, and then whatever we anticipate. If we think that, you know, we have some big project that we want to use impact fees for, then we'll budget to pull more out of the fund balance to cover it. And so I haven't really worked this up yet, haven't really had time. But I just wanted to go over it since we have time today to, you know, just let you know how it all works. Then these debt service accounts, I haven't had time to plug the numbers on these, but they're very simple. So our courthouse debt, I think next year is the last year that we have to pay on this. And we actually quit collecting property taxes for this debt service because we had enough in reserve over, you know, almost 30 years of tax penalties and interest, redemption. That adds up every year. You know, you can see you get a little bit of money every year. And over the course of time, that added up to be enough to cover the last 3 full payments of the debt service. And so we actually canceled the levy on this GO bond in 2020. And then in 2022, next year will be the final payment. I do generally, I guess, budget zeros on these. Although even though we do get, you know, a little bit of redemption and tax penalties and interest. And I think, Chris can correct me if I'm wrong, but I think, you know, this money will keep rolling in even after we pay the bond off. Is that right, Chris?
Yep. Yeah, for, approximately 5 years, if everything goes well, that's when you would have, hopefully your last parcels being paid off on it.
All right. And so, but until we actually pay off the debt, that money can't be used for any other purpose. But from what I gather, talking to the tax commission, once we pay the bond off, the prior year redemption and tax penalties and interest can just be transferred into the general fund. But we're not allowed to do that yet. If we have any excess, we're not allowed to do anything with it until we pay the bond off. Or I don't know if that's strictly true, but I did talk with the tax commission about this high reserve, and I would say, well, if we what's the statutory regulations on, because if we kept collecting every single year on the levy, then by the time the end of the bond came, we'd have like probably $600,000 more than we needed to pay off the bond. And the advice of the tax commission was, hey, that levy is specifically for that debt, and you should just cancel the levy if you have enough money to pay the debt, which is what we did. He couldn't cite me any statutory regulations about it or anything, but obviously I think that's the right thing to do, and so that's what we did. And so it's just basically a matter of paying one more payment, and then we'll have that last courthouse remodel paid off. It's about $190,000 a year. And there's a amortization schedule that I'll pull these numbers off of for the budget, but it's very straightforward. There's not really any decision points to be had on it. Might as well cover the library's debt service, which is virtually the same thing, except for we're still collecting on where we still have a levy on that. And so library's bond, this is just the bond or the levy on the bond for the construction of the building and whatnot. They have a separate levy for M&O that goes into their actual operational budget, but this is just the budget for the debt service. Again, there's no decision points to be made. It's just, straightforward. We project what we think the levy's going to bring in, and then we budget to pay the debt service according to the debt schedule. So we're actually, once the GO bond is done next year, Grant County is going to have a very, very low annual debt obligation. We've got a handful of small loans for the airport. We've got the jail remodel. But we really don't, have any huge debt. We also owe on the Grand Center about $90,000 a year. And we'll cover the Municipal Building Authority another time because that's a very complicated fund, and that's where a lot of different projects are budgeted out of. But we're doing really well in terms of our annual debt obligation, and so that's good.
So Chris, have you worked out if we were to continue to pay the same amount we have been paying on the courthouse debt service, what size of a loan does that work out to?
That's a good question. I'd have to reverse engineer that, I guess.
Yeah, obviously it depends on current interest rates, but it would be, just since we've been paying that for years and we're kind of used to it, that's a good baseline for deciding for, courthouse expansion or whatever.
In this, it was a GO bond, so there was a property tax levy that paid it. It didn't, but if, obviously we could, if we were to pledge sales tax or whatever, it'd be similar. In this case, I guess the difference, is if you don't do a GO bond, then you don't have a dedicated revenue stream to pay it off. Of course, you can always pledge sales tax or whatever, but that's not a new revenue stream. GO bonds are high security. There's substantial security with GO bonds because they come with their own revenue stream that matches the debt load.
And the GO bonds are the ones that require a vote to.
Yeah, they're required. In talking with Zions, they definitely said that GO bonds are the lowest interest rates of all, but clearly the hardest to get passed. You have to run an election and a lot of work. But our debt load is so low, and we have such a high coverage on our sales taxes that we'd probably be maybe, I don't know, I think we might be looking at like 1.9% on a GO bond and like 2.4 on a sales tax pledge. So I mean, it's a substantial difference, but it's not like we can't get a decent interest rate just with a sales tax pledge. Earlier in the year, when interest rates were at rock bottom, Zions, I think, quoted me out at like 2.2% on a sales tax pledge, but interest rates have crept up since then, and I think we're now more in the like 2.5% realm. The longer time goes on, I'm sure interest rates are going to creep up. So it's a good time to finance right now. Before they go up much higher. But yeah, I mean, we canceled the levy on the GO bond, but not a single citizen wrote in to say thank you.
They made up for that by writing in when Moab City was going to raise taxes.
Yeah. They never notice when taxes go down. Anyway, that's all I have for today. And we're going to start in next week with actual bringing in department heads and or elected officials to go over their budget requests that they're going to submit to us. And so this really tackles the majority of sort of like the non-department budgets, and everything else. We're going to, be bringing in department heads and elected officials to go over their budget requests from here on out. Anybody have anything else before we close the meeting?
I'm good. Thanks, Chris.
Okay, just for the record, I forgot to say who was on this meeting. So for the record, we got myself, Chris Baird, Quinn Hall, Kevin Walker, Zach Wachezek, and Chris Kaufman, and they are all on the Budget Advisory Board. And then we also have some other staff, Mallory Nassau and Renee Baker. It is 2:38 p.m., and so I'm going to close this September 17th meeting of the Budget Advisory Board. Thanks, everybody.
Hey, Chris, I got a quick question. Are we getting another commission member on this board?
Angela Book was appointed, but I don't think she's available. She wasn't available this week, but I think she'll be joining us next week, I think.
Yeah, she's out of town. I misread the calendar, but she will be back next week and start participating.
So she's going to be the department head.
Yeah.
Yep.
And aren't there 2 slots for commission members, or am I getting that wrong?
Mary is also on here, but she didn't make it today.
Oh, okay. Mary's on here still. Okay, great.
So yeah, Mary is absent. Angela Book is absent.
Thank you.
Okay. All right. Thanks, everybody.
Thanks, Chris.